are talking about an ideal GST, what I just said, that ideal GST is something different. We are not going to have ideal GST. So that is point number one. And point number two is, still if you think, if you talk about a manufacturer at a larger scale having multiple state operations, if you really look at the number of compliances he is exposed to today, under GST, at least his points of compliances will reduce. Because let's say under central taxes, so many other additional taxes going to be subsumed under central GST. Under state taxes, so many other state taxes going to be subsumed under state GST. So at least from those litigations, means what happens is, suppose suddenly for luxury tax, suddenly for amusement tax, suddenly for entry tax demands or maybe issues or examinations and investigations, or for that matter assessments. So you face assessment a number of times. Sometimes professional tax authority, sometimes entry tax authority, sometimes luxury tax authority, sometimes cess authority, labor cess authority. So many authorities from the same state government, but different authorities coming for data from you, and that means basically you are exposed to an assessment procedure. So now that will also at least be reduced to one, so far as state level is concerned. Similarly under central also, from multiple authorities at least you will be limited to only one. From those multiple, again some others are there which will continue, but so far as those taxes which are going to be subsumed, to that extent the number of authorities will be reduced. Number one. Number two, this is number two. And thirdly, since this time they are talking about GST Council, statutory authority as I said. Secondly, as I said, as Mr. Poddar explained, that we are going to have one common portal, GSTN, under which the registration process and the payment process and the returns process all are going to be uniform. Yes, you are to make an application to 36 different authorities, but the application form you have to fill up only once. Today you have central excise application form different, service tax application form different, VAT application form in different states different. So you have, in GSTN, I will just give you one simple data. Presently under central excise, that is central taxes and state taxes, all which are going to be subsumed under all these laws, there are total 446 different types of forms. 446 different types of forms in the country prevailing, which will be replaced with only 19. So at least when you are operating at a multi-state level, at a national level, so if 446 forms going to be reduced to 19, so to that extent drastically you are going to be relieved from compliance procedures. So third point. Now fourth point is, of course, if this is reduced, if the number of authorities is reduced, that means whatever data are required, once if you can analyze and identify the different fields which are to be created or which are for which the data are required, if those fields you can identify, and once you can put your system in place by introducing a new system of under ERP or SAP or whatever it may be. So once you can make your system in place, then to a great extent you can say that your cumbersome compliance procedure as at present will be reduced drastically. The only thing is we have to understand that where it is going to be. That means suppose if hypothetically I am saying, let's say if you are presently at this level and under ideal GST you should be at this level, so you are actually not going to at this level, but you are coming at this level, somewhere in between. That means to a great extent you are getting reliefs from compliance obligations and all. Accounting procedures will also be to a great extent it will be simplified. And for that matter, litigations, for fifth point, points of litigations. Presently the points of litigations are on classification, on valuation. Valuation still it is going to be there, but so far as classification is concerned, number of disputes are going to be again reduced because the rate is going to be uniform. So classification disputes will be minimum. And so number of litigations also will definitely reduce. New litigations will emerge, but the earlier issues, many of them will be resolved, and overlapping issue also in many cases, not in all cases, because that is why we are saying that when under the ideal GST we started with the mindset that yes, classification disputes will not be there, overlapping issue will not be there, because central government and state government both will have concurrent taxing powers. So that means you do not distinguish between goods and services, but then in the return you are asking for what are the goods, what are the services, and criteria for interstate and intrastate for goods and services are different, for IST it is different, and for additional tax it is different. So that means again you are creating those differentiations. So that is why new problems are being introduced. But nonetheless, yes.
So you've been dealing directly with the department. So after these forms have come in, after the procedures have come in, are the training of departmental officers on, or what do you think about that?
I think let's not discuss on that. Whether I said it was just a remark that many of probably it's better that I do not make a remark on that. Let's not discuss on that. That is not our subject of discussion. So that was the basics, friends. With those basics, now if we talk about exactly the returns, again, I was discussing with Mr. Pulaksa also. He also said that I do not want to bother you with the exact forms, etc. Actually, so because no point in going headwise through each and every form. But basically, what they are asking for, I think more we should focus on that. That what they are exactly asking for and what are the issues that would be relevant for that. I would say only one thing on your issue, that these business processes, that means the process of registration, then payment of tax, then returns and then refunds, these reports are prepared by whom? These reports are prepared by joint working group. What is that joint working group? That joint working group consists of officers, representatives from central government as well as each and every state government. That means what? And if you go through this business process papers or documents from this in these reports, you will find there is an annexure given that who are the officers who were present in those meetings where it was passed, that means finalized. There we will find that all the states had their representatives there. That means what? All the states, their revenue officers, they have contributed to this. Now maybe suppose, like for example, if West Bengal have say 2000 officers, of course 2000 officers were not involved. But out of 2000, maybe 2 or 10 or 20 officers were involved. So they are at least aware, not aware, they have made this. Now how they would percolate the knowledge down the line or the things down the line, that is their issue. So that is why I said that let's not talk about that. Now friends, if you talk about these returns, basically we are going to have 3 returns. GSTR 1, GSTR 2 and GSTR 3. And all these are monthly returns. Now monthly returns, mind you friends, presently under central excise, assessees are filing monthly returns. Under service tax, assessees are filing half-yearly returns. Under VAT, we are filing quarterly returns. Most of the states have quarterly VAT returns. But under GST, all are going to file monthly returns. So that means for service tax from 6 months to 1 month, for VAT from 3 months to 1 month, and for central excise, it is already 1 month. So monthly, and again under central excise also, like small dealers, they are filing quarterly, but otherwise it is monthly. So you are going to file monthly returns. So that is most important part, that monthly return is to be filed. And if monthly return is to be filed, so monthly data, that means your system should be so intact and in place that at the end of every month, immediately you get all the data. And if any data is missed out, what is going to happen, we will understand in next few minutes. So monthly, that is very important, that the return is going to be monthly. Now for manufacturers, maybe since already for central excise they are compiling the data for monthly returns, so maybe possibly they would be comfortable or not very much at difficulty to compile the data for monthly returns, but only for central excise. But so far as VAT is concerned, under VAT there are so many ifs and buts. This will be VATable, that will not be VATable, this will be under negative list, and that will be stock transfer and not sale and all that, for that reversal, etc. These things make it so cumbersome that even on quarterly basis also, after the end of the quarter they are getting 1 month's time, but that is also not sufficient. Many a times we find that the large size manufacturers, they are not able to cope up with that liability or obligation and not able to file the quarterly returns in time. Very often we find that. but that is going to be on monthly basis. So now you have to be, your system has to be more geared up and more tight system. So that is number one. Number two is the return form is going to be uniform. That means for central as well as state, now you have different return forms for service tax, different return forms for central excise, different return forms for VAT. Now you will not have three different forms, rather you will have one form for returns, and that same form of return will be filed to central government as well as different state governments and as well state government as well as for service, that means for service tax or central excise or VAT, all three. Because the name going to be a name changer. So for central excise CGST, for service tax CGST, for state VAT SGST, and for interstate that is CST, it will be IGST. So all this, and for central GST, state GST and IGST, for all these three GSTs, one single return, for both central as well as state, one single return, and to be filed through online through that portal, and just click with central GST or state GST giving the state code etc., and it will be done. So that is a part of relief, as I said. But these returns, GSTR 1, 2 and 3, I said 3 returns. 1 is for sales, 2 is for purchases. In fact, it is not sales or purchases. I am for simplicity, for easy reference, I am talking about sales and purchases. Actually, it is instead of sales, it will be outward supplies. Instead of purchases, it will be actually inward supplies. So outward supplies, inward supplies. So one return for outward supply, one return for inward supply, and one consolidated return. So these 3 returns will be submitted on a monthly basis every month, and then again Mr. Saab probably was referring to that GSTR 8, which is going to be an annual return. So if there is any omission or failure etc., which could not be rectified earlier, that can be taken care of in that annual return. So monthly basis 3 returns, one for outward supply, one for inward supply, and one consolidated, and at the end of year, by 31st of December, that means you are getting another 9 months time, and then you file your annual return. These are the 4 returns. So on a monthly basis, on a regular basis, 3 returns. And then we have GSTR 4, which is for compounding dealers. Like presently also under state VAT we have compounding dealers, that means composition scheme. So that is going to continue. And GSTR 6, which is for ISD, input service distributor, for service tax purpose. So that is going to be in the form of GSTR 6. GSTR 7 is for TDS and GSTR 5 is for foreign citizens and all. So those we are not discussing. So mainly GSTR 1, 2 and 3. And in GSTR 1, that is outward supplies, what they are asking for, just see. Intrastate, interstate. Naturally you have to give separate details for how much is your intrastate supplies, how much is your interstate supply. And please pardon me if I sometimes refer to sales. Actually I do not mean sale, always it will be supply. And where it is actually sale, I will refer it specifically, otherwise it will be always supply. So intrastate supply and interstate supply separately, and both as again intrastate for goods and for services, interstate for goods and for services, all separate data. And then compounding dealers, then ISD, TDS, okay. Now mind you, B2B means business to business. That means when you as a registered dealer are selling to another registered dealer. So that we are talking as B2B. So in case of B2B, all transactions, that means all sales at invoice level, that means the details of each and every invoice has to be given. Now mind you, I fail to understand one thing, that when they are talking about outward supplies, then why they are saying that invoice level? So that means what is invoice? So as I said, many things you have to construct from here, and then you have to construct the GST law actually. So from all these discussions you will find many points will come out, and for that you will only get an indication from here that this is probably going to be meant by this particular term. So by this term invoice, it may not be necessarily sale invoice, it could be supply invoice as well. That means stock transfer invoice for that matter. Actually it is not going to be a stock transfer invoice, because stock transfer concept more or less will go. But still in some cases there will be some transfers. Like within the company, inter-branch or inter-division transfer, that means from one division to another division. That means I may have 2 different segments or 2 different lines of products. So like let's say in case of steel, many companies have integrated steel plants. So in one plant they are manufacturing sponge, in another plant they are manufacturing ingots, in another plant they are manufacturing billets or something like that, to say whatever. So from sponge, the sponge being manufactured in one plant, supplied to another unit where it will be converted into ingots. So there is a supply. So it is actually again stock transfer. But for which, since it is not sale because it is within the company, so it is not a sale. But for that stock transfer invoice has to be raised again, like Mr. Pulaksa was talking about. Similarly, from ingots, when the ingots will be transferred to another unit, another invoice is to be raised. And for that matter, you will find subsequently they are talking about turnover. So I do not know what they really mean by this turnover. But actually, it has to indicate ultimately that turnover means all the supplies. Now, this cannot be actually reconciled with the financial books of account. We will come to that as well. Any question? Okay. So, B2B, all transactions at each and every invoice level is required. B2C, that means business to consumers, that means two non-registered parties. In case of interstate, above rupees 2.5 lakhs per invoice, again each invoice level details is to be given. Above 0.5 lakhs, that means 50,000, where the address of the customer is given, because the law is going to be provide, as I said again, the law is going to provide that in case of an invoice of more than 50,000, address of the customer has to be compulsorily given. Like presently, in many cases you find that you go to a shop, across the counter he is selling. Suppose you buy, let's say you go to a jewelry shop, you buy a jewelry worth say 75,000 rupees, you pay cash or check as the case may be, and he will give you a cash invoice and you buy that jewelry and go away. But now that cannot be done. The address of the customer has to be compulsorily given. Now whether you come from the same state or from some other state, he does not know. But now this situation is going to change. And for less than 0.5 lakh, that means less than 50,000 rupees, address is not required, and in that case it will be treated as if it is an intrastate sale. So for B2B all, for B2C more than 2.5 lakhs each invoice, for more than 0.5 lakhs again state-wise summary is to be given, and for less than 0.5 lakhs as if it is intrastate, and accordingly summary is to be given. And where the turnover is greater than 5 crore, HSN code, it is another requirement. HSN code means many of you may be knowing, like in Central Excise and Customs we have tariff based on HSN code. So tariff means rate of duty given based on HSN code. So, and HSN code here in India we are following 8-digit level HSN code. HSN code means harmonized system of nomenclature. Actually the entire term is harmonized commodity description and coding system. So that is an international goods classification code that we are following. But this 8-digit level classification code, if you are required to follow, again classification disputes are inevitable. So now they are saying that okay, to start with you don't require 8-digit level classification code, because you know in Central Excise tariff that is divided into 20 different sections and 96 chapters. So let's say chapter 39 is for plastics, chapter 40 is for say rubber, something like that. Chapter 52 to 53 to 66 probably it is textiles and all that. So under different chapters, in chapter 84 and 85 for plant and machineries etc., chapter 87 for vehicles etc., like that. And in that chapter you have different headings, and under each heading you have sub-headings. So chapter is denoted by a 2-digit level. So chapter 39 means 39, 40 means 40, 72 means 72, steels, like that. So 2-digit level and 4-digit level means under chapter, again there are many headings. So 2 digits for chapter and next 2 digits for heading. So 4-digit level. And then under heading also you have sub-headings, and under that also 8-digit level. So you don't have to go to 8-digit level. Now they are saying that where the turnover is more than 5 crores, HSN classification code up to 4-digit level, that means up to heading level, is compulsorily to be mentioned in case of goods. And in case of services, AC means accounting code. Accounting code means service accounting code. That means again, like presently we have services accounting code, minor rate, major rate etc. given. So similarly they are going to give you an accounting code for services. So the accounting code for service is to be mentioned. So that means here if you find, you don't have to give the description of the goods, but the classification code is to be given and then the respective values etc.
So this has to be given invoice wise?
Invoice wise, yes.
And what in the case of works contract?
In case, for that also they would definitely say, because he is saying that, they are saying that for goods HSM code and for services accounting code, so that means definitely for works contract also they have to devise a mechanism as to how it will be denoted.
Because in the previous slide also we have asked us to divide the total supplies into goods and services.
Correct.
What happens in case?
You are right. Mr. Saha raised these issues now already. Even Mr. Podar also raised these issues. that there are really going to be some grey areas. Like in real estate, I will come to that later on. That in real estate, actually, what is we are going to face a lot of problems in real estate, in works contract, in case of works contract, in case of restaurant services also. I think someone referred to that. Then in case of softwares also, in case of supply of tangible goods on hire also, there are many cases where these disputes will be there. So they have to come out with either some instruction or clear guidelines for classification on those issues. Otherwise, that is why I am repeatedly saying that are we really going to create a mess? Because this will be really difficult to identify. So HSM code at 2-4 digit level for goods and accounting code for services is compulsory. Where the turnover is more than 1.5 crore but up to 5 crore, there 2-digit HSM code for goods, and where in case of compounding dealers, HSM code is not required. In case of services, where the place of provision is based on the nature of service, like presently we have place of supply rules. In that case, again they are saying that accounting code is mandatory. In case of import or export, 8-digit, as I said, goods for goods we have under customs 8-digit classification code, so that will prevail. And in case of services, accounting code again will be compulsory for import or export. And where the turnover is less than 1.5 crore, only description of goods and services will be required. HSM code or accounting code for services will not be required. Then in case of B2C, so far we talked about B2B, like here we said in case of B2B all transactions, in case of B2C interstate more than 2.5 lakhs all invoice level, and greater more than 0.5 lakhs state-wise summary, less than 0.5 lakhs state-wise summary. Similarly, in case of B2C transactions, interstate consolidated, even if it is interstate, but if it is B2C, consolidated details. Just 1 second. Yeah, please.
All the turnovers are monthly turnover or yearly turnover?
Monthly. And mind you, turnover criteria, here it is only criteria that if the turnover is more than 5 crore or less than 5 crore and all that, that is for the previous year annual turnover. You are right. That is for the previous year annual turnover. And for the first year, that means suppose if it comes from 1st of April 2016, so 16-17 is the current year, so that means the previous year is 15-16, and for the year 15-16, the turnover may not be readily available with the department, so they are saying that on your self-declaration basis, they will accept that as a previous year turnover. Suppose if you declare on a self-declaration basis that my 14-15 turnover or 15-16 turnover was 4 crore, so accordingly 4-digit classification is not required, they will accept that. But for 15-16, once 16-17 is completed, now your total turnover or transactions or total data will be available with the department with the system. So for 17-18, your 16-17 turnover will be automatically taken from the system itself. But for the first year, they will take it on self-declaration basis. Now, reverse charge, as Laksa already said, that under reverse charge, that means yes.
So in case of big scale companies who are having a turnover,
In case of
big scale companies who are having a turnover,
big size.
who are having a turnover of 50 to 60 crore,
Right.
how will they declare their invoices separately? Monthly?
See, we are already giving invoice-wise details even for 1,000 or 2,000 crores turnovers companies. So it has to be given. The format is given already. I will show you the format also just for a glance. But in that same format, like in case of ROC, you talk about ROC, under MCA portal, you are giving the details, say large size public sector companies, listed companies, they are giving details of all the shareholders, thousands of shareholders, but they are being given in a CD. So that means electronically. So similarly here also it will be given. Actually, submission is not a problem, but compilation of data, and for that matter even compilation also, that would be done through your system only. So for that you must have your system in place. That is more important. So the customization of your system, that is more important. And in this customization, in the process of customization, identification of fields and capturing of data in those fields appropriately, that is more important. So to bring your system in place, so to realign your system to make it GST compliant, that is more important. So after that, once it is in place, whether it is 1,000 data or 5,000 line items, that would not really matter. So under reverse charge, again reverse charge they are going to continue, and we can understand if these are the, see friends, I will just come to that. Then advance received. Now if you receive an advance, like in case of services particularly, we already have that concept. Now you do not know that even for goods also they are probably going to bring this same concept. that if you receive in advance, you have to pay the tax in advance. But at least for services, it is for sure that if you receive that amount in advance, you have to pay service tax. And once advance is received, so point of taxation, based on point of taxation rules, it will be liable, so that information will be given. And invoice against advance, that means suppose earlier you had taken an advance, so that was reported. That advance, this month you are raising an invoice, so that details also to be given, because so that your total turnover is reconciled, but on that part of turnover on which you have already paid tax on advance basis, that is to be reduced, so that details are also to be given. Then export on payment of IGST, without payment of IGST, like presently we have. So again I am saying that you have to construct the law. So the construction is that means there is going to be a provision for export on payment of GST as well as without payment of GST. Both is going to be there. Indications, all indications. Then revision. See, suppose this is today is 27th of November. So for October you have already filed your return. But in one particular invoice which was issued in October, that invoice is somehow for some reason or the other required to be revised in the month of November. So for that revision, what we do normally? We issue a debit note or a credit note as the case may be. So accordingly, based on that debit note or credit note, that revision of invoice, that details also to be given separately in a field. So for all these information, separate tables are prepared in the form, return form, and you have to give those details. Because accordingly, if there is any debit note or credit note issued for, let's say, discounts or incentives or in many other things, for upward revision, lower revision or rate escalation and all those clauses. So for that, if there is any revision, so accordingly the tax amount is also required to be adjusted. Maybe differential amount of tax to be paid, or maybe some amount of tax to be adjusted, that is you will end up at excess payment of tax, so both could be possible. So that adjustment, for that you have fields. And then supplies at, mind you, nil rate or exempted goods or non-GST goods. That means so far we talked about up to point number 20, all taxable goods under GST. Then you could have goods which are subjected to nil rate of duty, that means nil rate of GST. Like presently we have under tariff nil rated goods. Similarly under GST also you could have nil rated goods. Then you could have exempted goods, that means exempt by an exemption notification. So the tariff says there is a rate, but through an exemption notification it is exempt. Or there could be non-GST goods like say petroleum or alcohol. So you could have those supplies as well. So for that also, for all those three categories you should have different, you have to file the data differently or separately. And again for all that separately for interstate and intrastate. That means nil rated goods interstate, intrastate, exempted goods interstate, intrastate, non-GST goods interstate, intrastate, like that. And that too, 2 registered taxpayers and 2 consumers. So mind you, the classification actually would be how much, how many different types of data capturing. So 3 into 2, 6, and 6 into 2, 12. So that means 12 different types of reports. Only on this point number 21.
This is also invoice wise.
Sorry?
This is also invoice wise.
Invoice wise, yes, invoice wise. And then the last is, of course, corrections in earlier return. If there is any correction in earlier return, that means last return which you find, as Mr. Saha said, there is no provision for revised return. But if you find there has been an error in the earlier return, so you can make a correction to that through this return. So you will have a provision for that as well. So this is all regarding sales, that is supplies. Now this return form, as I said, let's not go into that specific separately each and every field, let's not go into that. But basically those are the requirements. Now GSTR 2. Now mind you, one more thing I just probably omitted. This GSTR 1 is to be filed, that is sales details, to be filed by 15th of the next month. On monthly basis, so every month by 15th of the next month. And then GSTR 2 is what? Inward supplies. So that means let's say purchases. So inward supplies details in the form of this return by 17th. Why this is by 17th? Because as I said, in the portal you have to submit your return. So from whomsoever you have purchased, suppose I am a manufacturer, I have purchased from 3 different suppliers. So all 3 of them have submitted their sales returns, that is GSTR 1 by 15th. So my GSTR 2 will import data from those 3 returns filed by my suppliers automatically. So my GSTR 2 will be filled up automatically. Filled up with the details, purchase details, that is inward supplies details from those 3 suppliers returns. Now suppose if I find that there are some invoices which are still not mentioned here, I can add to that If I find that no, this particular invoice I do not have, or it is not my purchase, so I can delete that as well. So I would have an option of addition or deletion, but other subject to that, the purchase data or the inward supplies data will be auto-populated from the outward supply data filed in those returns by my suppliers. So GSTR 1 to automatically it will come, and then I can add or delete.
And this will happen in 2 days.
Yes, in 2 days, yes. That is why they have given these dates, 15th, then 17th. So by 17th, we have to file your inward supplies data.
So in short, we have to do a reconciliation with each vendor within 2 days.
Reconciliation? No,
Sure.
only since they would be uploading by 15th, and then you have to upload. So once that is uploaded, the data would naturally be imported into the system maybe within few seconds or few minutes. But then you have another 2 days time so that you can verify and then addition and deletion.
Just 2
Sir,
days.
That's right.
but for example, one seller has been sold from Gujarat.
Sorry?
One seller has been sold from
No, one by one let's, sorry?
one person has been sold from Gujarat state to West Bengal.
Right.
His sale is instant.
Correct.
But the purchaser will account for when he will receive the goods and invoices, etc. There will be time gap always.
No, you see, accounting is a different thing. We are talking, let's say the law says that when it will be accounted for. So when the goods are actually received, you account for in your books, and when you account for in your books, accordingly you file your return. So now that is completed. Now based on that principle, suppose your supplier in Gujarat has uploaded his return for the month of October, in which he has given details of sales to me. I am Arun Agarwal, so in favor of me, in my name, he has given line wise details. So in my purchase returns or inward in GSTR 2, that details will automatically come in. Now that is of course based on if those goods were received by me in October. If it is received in November, then I will not file. So those time gaps could also be there. You are right. That if he is
That means reconciliation is required again.
right, this will be required. Absolutely, it will be required. That reconciliation will be required, and that can be done. That already provides that suppose he has sold on 30th, so he has booked on 30th, and accordingly he uploads his details. But when I receive on in the next month, so I take it in my next month's return. So in the previous month's return, there could be a reconciliation, an item that is possible. So these are the details. Then in case of imports again, goods or capital goods and services, details of imports, yes.
So in that case, we'll be dependent on the sellers, and if the sellers don't file, then we'll have to file everything manually, and a lot of manual
No,
work will be-
you cannot file manually. See, that is why probably again some speaker said that if it is automatically not done, then yes, you can add or delete. Yes, you are right. But if that is, somebody said that if it is more than a particular limit, then there could be issues, and you might be required to explain those issues and all that. So that is possible. That is why they are repeated. What they have done is they have prepared a theory, and they have converted this entire theory into a document, into a report. How far it will be practically implementable, that probably is not thought about, for which actually this consultation, stakeholders consultation was necessary, for which I said that actually is not done, and for which I am repeatedly saying that this might create a mess, because actually it is very difficult for each and every SSC to file his return in time, and accordingly corresponding details to be auto-populated in my other suppliers. See, if I am doing business, I might have 50 different customers, so that means my 50 different customers' compliances will depend on me. Accordingly, one company might have 500 different suppliers, so if one of them is not compliant, for which I would also be non-compliant, this is going to happen.
So what is
This
the
is
measure?
what the paper says.
Sir, what is the measure against this?
What is it?
What is the measure to reconcile this?
The system itself is saying that he files his GSTR 1, and in my GSTR 2, those data will automatically come through that system.
Oh, automatically come.
Right. So if that does not come automatically, that means there is a problem according to them, and if there is a problem, then there will be whatever further inquiry and investigation, etc. Based on that, if you can, but it provides that yes, suppose if you find that one invoice you have, he has not filed in his return, but actually I have that invoice, and actually I have received those goods or services, so I can add that in my return. So addition and deletion provision is given.
So
But if
both returns should be same, no?
that is why I said that his sale return, from that my details of purchases will come automatically. But more than that, if I have any more invoices, I can also add that as well. But once I add any such invoice which was not given in his return, so the department will ask me for further details.
Yes.
So that will be there. But I can do that. Now, next is import, yes. Okay. Now then GSTR 2, now mind you, there is another concept of ITC ledger, cash ledger and tax liability ledger. Mind you, these three ledgers will also be automatically created in your name into the system, into the portal. And these three ledgers will be shown on your dashboard. When you click enter your user ID and password, there will be a dashboard. On the dashboard you will find three different ledgers: electronic, current, running ledgers, running account ledgers. One is ITC ledger, one is cash ledger, and one is tax liability ledger. So whatever purchases you have on a regular basis, whosoever your supplier is, if he files his return, all those data will come in your GSTR 2, plus the ITC element will come in your ITC ledger automatically. So your ITC ledger current running account, it will always be on real time basis, it will be updated and it will show you how much ITC balance you have in your account. Similarly, cash ledger means whenever you make any cash payment through a challan online, that will also be reflected in your cash ledger. And accordingly, when you are filing your GSTR 1 return, so the output tax liability, that will also show in your tax liability ledger. And in that tax liability ledger, whatever is the opening tax liability, further tax liability, minus paid, whatever from ITC, from cash, and the net liability. So opening balance and closing balance. So all these three running account ledgers will continuously be updated on real-time basis on the basis of your own data. Some data from your own returns, some data from your supplier's returns. So the system will take automatically. What I am saying is repeatedly, to us, to our mind, presently it seems as if again कि एक पूरा theory बना के उसको एक paper form में present तो कर दिया. Now what is going to really happen? Because of non-compliance is different. Because we are in a country where compliance is not so automatic. Even I can tell you, even till today, after introduction of 10 years of VAT, state VAT, in many large size corporate houses, I am talking about thousands of crores of turnover having, in those companies also we do not have a fully compliant VAT system compliant, VAT compliant system in place. So if that is not there, so how can really this real time online every month in time the returns can be filed and from that data can be populated, auto-populated in my return and accordingly my ITC ledger and cash ledger and accordingly my tax liability ledger and accordingly I know or I get the real